Target is down over 30% as of the beginning of yesterday. In 2 days, actually a day and a half, the price of Target stock is down 30%, actually about 32% as we sit here right now. Can you believe that? All right, going back to 1987, and I'll never forget this, as an economics professor, when we're talking about rational market theory and whatnot, the CAPM, the capital asset pricing model, the whole silliness, the Black Scholes and all this stuff is just so flippin' stupid. I'll never forget this guy. He said, so is the markets rational before October 87 or after? When were the markets rational? That immediately should put to rest the idea of the market being rational based on all current information everyone has access to. So you're saying, okay, so the market was rational on Tuesday, right? Today's Wednesday, Thursday. And it's rational again today based on earnings report. The Target revenue and gross profits are down by half. So one quarter report wiped out 2 years of earnings, of market upside for Target. That's not rational behavior, that's irrational. Stop with this stuff about modern portfolio theory, capital asset pricing model, efficient market hypothesis, that's what's called, EMH. Efficient market hypothesis, markets being rational. Go back to John Maynard Keynes. The market can be irrational longer than you can be solvent. It makes no sense that in 1 quarter of earnings, the market would drop 32% in basically a day and a half of trading. That's completely irrational. All right, that either shows the market was irrational on Tuesday or it's irrational now. Either way, it points that the market is inherently irrational because it's not rational behavior. You bought the stock on Tuesday, rationally or irrationally. A quarter of earnings comes out that's bad. Again, they've lost half their profits. 1 quarter now. I don't know what they said in terms of future. I don't know. But you're sitting there thinking, okay, so now the market is rational because we have earnings projections that are bad. You didn't see that coming on Tuesday? It's kind of like the whole thing with the bond market. The bond price is going to collapse the minute they raise interest rates. No. The bond prices fell well before they raised interest rates. In fact, have you noticed what BND did, or Ginnie Mae did these last 2 days? What's BND doing right now? But they're going to raise the rates, Josh. They keep saying it. They just did. Back in March, they did it again. Even if they're saying it's already priced into the equation. You see how this works? So a guy who bought the stock, Target, on Tuesday, he was not anticipating, obviously, because remember, for a stock to trade, there's got to be a buyer and a seller. So I'm sure there's well over a million shares traded hands on Tuesday. That means a number of people bought the stock, I guess, ignorantly, not realizing where the market was going to go the following day when they announced earnings. Are those people stupid? Are those people irrational? The people who sold it to them are rational? Well, the people who sold it to them still had the stock on Tuesday, right? So apparently they were also irrational? It just doesn't make sense. What does this have to do with anything? Well, Target is Target. What do I mean by that? You look at the PE ratio right now, it's about 10, all right? So a lot of people say Target's a great buy because valuations are way down and the PE ratio is, just through the floor. That's a great buy. No, it's not a great buy. Doesn't mean it's a bad buy. Just this is what I said back in March of 2020. I said, man, don't look at it as an opportunity right now with PE so low, because the reason the PE is so low is because the price is still low, has gone down by 32% relative to last quarter's earnings. All right, so if you're looking at a PE, you're looking in the past. Now you can look at a PE for a projected 12 months, All right, not trailing 12 months of earnings, because trailing 12 months TTM is stupid if you're buying on PE. You say future prices or future earnings, projected earnings. That's what you buy it on. All right, so the price right now is way low because the market is just taking 32% off it in 2 days. The earnings are still based on last quarter. They haven't come out yet in terms of actually showing you what the current earnings are. As such, the PE looks very attractive, and you'd be crazy to think that that is a true number. Now, with that said, has the price fallen more than what the earnings decline is? Well, I think I read that the earnings was down 50%. The price is down over 30%, so they say no. The price is still well above what the earnings decline was. Yeah, and I would think that'd be a dumb way to look at it, actually, because the price is based on future earnings, and as long as the earnings are positive, they're going to be in the profit. They'll be making money. As long as they're making money, all right, that's all that matters. Are they making money? Yes, no, or otherwise. Are they growing the profit margin? Yes, no, or otherwise. Are they paying a dividend? Yes, no, or otherwise. Are they growing that dividend? Yes, no, or otherwise. Are they taking on debt? Yes, no, or otherwise. Are they increasing or paying down their debt? All these things. That's what you got to look at. And if you think that Target is still going to be around 10 years from now, and that they're just got a squeeze on profit margins now because of the insanity of the high price of energy, then you say, yeah, it's still a good buy. In fact, if you have cash, you'd probably buy more because you're still going to dividend. I don't know if Target's cutting it. Don't know. Don't know if they have how much debt they have. Don't know. All I know is at the end of the day, Target is a pretty mainstream provider of goods and services, or goods, I should say, that Americans like to consume. Now, will that stop as we go into a Great Depression? Probably. And that's the risk of any stock that you're buying. You're saying the risk is that the stock will go bankrupt, right? They'll stop Sears. It will stop providing goods that people buy, and as such, you'll have to close stores and ultimately shut down. Exactly what happened to Sears. Exactly what happened to the malls across the United States. I think there's a YouTube channel called Dead Malls or something like that. It's very, very interesting, actually. Like Paradise Valley Mall, where Charlotte and I got our wedding rings, the K Jeweler there. That mall was fancy schmancy, good time rock and roll, so all the rich people live. And now I think it's dead. It's crazy. Why? Because the anchor stores shut down. Target is an anchor for many of these retail places. If Target starts shutting down, the REITs you're invested in that own those properties in those buildings are going to be in a world of hurt. Simon Properties, for instance. I don't know who owns Target. I don't know if they own it themselves. I don't know. But anyway, at the end of the day, you just got to say, Target is down 32% in less than 24 hours of trading. That makes no sense. But it doesn't make sense because of why. It's too high before, too low now. I mean, who knows? So a combination, I don't know. And you say, well, I'm going to buy it, or I'm going to sell it, or I'm going to hold it based on what I think the future is going to be. Retail market falls across the realm. We go to a Great Depression where people are no longer buying kitchen supplies. That's what caused the Target, and I imagine Lowe's and whatnot. People are no longer buying appliances and big ticket items. They're focusing more on food and things of that nature. And this is where depressions happen, actually, when products are no longer being bought because people don't want to part with their money for big ticket items. They said, no, I'm going to put that on the side. I got small ticket items, food I got to buy for first. And that's a problem. Now, in some way, because we don't manufacture all this stuff in the United States anymore, at least the labor force won't be as impacted as it would have been when Bethlehem Steel and things of that nature went kaput. But it's still going to be, there's still sales, still retail. There's still people who are shipping products in the United States. There's still a lot of American workers whose livelihoods are contingent on the manufacturing, the shipping, and the purchase of refrigerators, for instance. And if people turn from that and instead buy food, that will have an impact, that's for sure. And it's gonna be interesting to see how this shakes out. All right, love to hear your thoughts. See ya.